All right, what's up, YouTube? So definitely want to talk about my risk allocation until the summer starts back up. Until school is over, my risk appetite right now will be definitely low, but definitely I'm thinking about picking it up since the school year is almost over. So just a couple more weeks, and we can definitely get into more leverage stocks and increasing our risk, but also minimizing the downside. So we want to increase the profits and minimize the downside. When it does happen. So let me go ahead and show you guys a way to increase your portfolio by 20%. So as we see right here, the bank sector, we see the bull ETF for the financial sector, and we see what happened when it got to its high point, 51. So we might be trading at a range from right here to right there, or we might be trading at a range from right here. So if we're able to, receive a good bounce, maybe we can do 20+% if we can break through and hit back to $51. Or if we go ahead and finish this piercing through support here, I definitely would hold off on the trade. So right now, let's go over to the XLF because that's exactly what this follows. So whatever the XLF is doing, this is pretty much going to do it. But as you see, the XLF definitely moves less volatile than the FAS. As you see, let's read. We can see it says financial bull 3 times the return on the share. So this is definitely following the financial sector tick by tick. So this as you see, if you can stack up the charts together, you would recognize that the pattern is just about the same. So as you see here, from $17 to 25, and if we go back to the FAS, we see from 21 to 51. So if we can see a bounce right here and kind of break out of this, sideways trading range, we can definitely see, higher profits. And this is definitely one way to increase your portfolio. Like I said, when these ETFs, when they do sell off and start to show, you know, a way to profit, you definitely want to jump on those because all they do is follow, the financial sector, and that's all it does. Follows the financial sector, as you see right here. It is a bottom just about right here. Yeah, it's almost bottom right here, but as you see, it's piercing through that support level. So we're definitely gonna eye out on that trade to see if it's gonna rebound from right there. But as every bank that reported today definitely showed growth. They definitely showed they had strong quarters, and definitely is going to show strong quarters for the quarters ahead. So this is definitely one way to play the banks. You can definitely buy XLF. Like I said, it gives you a broad-based investment over the bank, over all the banks. So that would include Bank of America, J.P. Morgan, Chase, or Citigroup, and many more. I think regionals are in here, but if they're not, you should go ahead and Google that. But for right now, we're focused on getting a higher return. And as you see here, we found a bottom, but also we want to pay attention to that bottom because that bottom might fall out, and we might be seeing a breakdown happen in the charts. And if we do see a breakdown, we can follow the XLF because the XLF does paint it paints a better picture since the FAS follows the XLF. So if we're able to see a breakdown further, we might see it run back down to these levels, but at the same time, we can just go back to history, and history definitely tells us that 2283 is the next level of support. So that's where we might see the stock go. But as we've seen today, it definitely almost hit those levels. So 22 and 8, and as we see here, 22.53, and we see a small gap right here. So we definitely don't want to get to those levels simply because the FAS, it will definitely get cheap. But at the same time, if you wanted to say, okay, I see the banking sector go down, even some more, it's going to pierce through that support level. You can go by the FAZ. This is the bear. So when these financial stocks fall, this is the one that rises back up. But as you see, the RSI is definitely showing us that it's almost overbought and is due for a check down. So this is definitely one way to get behind the banks. If you're really bullish on the banks, we see that the banks are oversold, and we see what happened when it was oversold last time. It definitely had a pretty good bounce around about $1 a share. If we go back to the FAS, we see from 21 all the way to 25 just about. So about a $4 a share on the bounce, but this definitely might be a super bullish trade simply because all the banks were doing very good, and there was no reason to sell other than geopolitical risk. But once next week starts, everybody's really going to be focusing on earnings and future growth. So until then, guys, take care.